How to qualify for a home loan in 2025, even if you think you can't. Maybe you heard, my credit isn't perfect, or I don't have a 20% down payment. But here's the truth. In 2025, there are more flexible pathways to homeownership than ever before.
Really?
In fact, according to the National Association of Realtors, first-time buyers made up 32% of all home purchases in 2024, showing that even in a higher rate environment, people are finding ways to qualify. And right here in Las Vegas and Henderson, lenders are rolling out creative programs tailored to affordability challenges. So if you've ever thought, I probably won't qualify, this episode is for you. Understanding the basic of loan qualification. Let's start with the foundation.
Okay.
To qualify for a home loan, lenders typically look at three main factors: your credit score, your income compared to debt, and your down payment. In 2025, many lenders are still using the FICO score, which has been the standard for decades. It's a three-digit number, usually ranging from 300 to 850, that shows how trustworthy you are with borrowing money based on your past history.
That was legitness.
More recently, some lenders are also starting to use the Vantage Score 4.0, which works in a similar way, but can also give credit for things like paying rent, utilities, and even cell phone bills on time. This helps more people, especially first-time buyers, show that they are financially responsible even if they don't use credit cards often.
Nice.
Here in Nevada, lenders are also partnering with state programs like the Home is Possible program, which can help cover down payment and closing costs for eligible buyers. That means your ability to qualify may be stronger than you realize, even if your savings account isn't where you like it to be.
Isn't that amazing?
Credit score realities in 2025. Your income isn't just about how much you make.
Really?
It's about how much of that income is already spoken for by debt. Lenders use something called debt to income ratio, or DTI, to measure this. For example, if half your paychecks already goes to car payment, credit cards, and student loans, a bank may think you won't have enough left over for a mortgage.
Oh no.
Most lenders like to see your DTI at or below 43%, though some programs in 2025 may allow a little higher if you have strong credit.
That's all right.
Here's where it gets interesting. Some lenders are now factoring in alternative income sources, like steady gig work, side hustles, or even consistent freelance contracts. For people in Las Vegas, where many jobs are tied to hospitality, entertainment, or flexible schedules, this makes a big difference.
Nice.
Nevada lenders understand that many households don't always fit into the 9-to-5 mode.
Thank you.
So if you've got a solid income history, even from non-traditional work, it may help you qualify. Now, let's talk about credit.
Okay.
One of the biggest stumbling blocks for many. In the past, buyers were told they needed a perfect score to get approved.
What?
But that's not true.
That's true.
According to Experian, the average FICO score in the US is about 717 in 2025. But FHA loans are still available to buyers with a score as low as 580, and sometimes even lower with compensating factors.
Really?
VA loans, available to veterans and active duty service members, don't technically have a minimum credit score requirement, though lenders often set their own threshold around 620. In Southern Nevada, where military families make up a strong part of the community due to Nellis Air Force Base, VA loans are a major option. And with some lenders beginning to use rental history in their underwriting decisions, more renters are finding they qualify for loans even without a long credit history.
Nice.
Down payment and assistance programs. Here's another myth. You don't need 20% down to buy a home. In fact, most buyers don't come close to that number. According to NOR's 2024 profile of home buyers and sellers, the median down payment for first-time buyers was just 8%. Nevada offers some powerful tools here. The Nevada Housing Division Home is Possible program provides down payment assistance up to 5% of the loan amount, which can make the difference between waiting and buying now.
That's right.
Local governments like Clark County also occasionally offer targeted grants to boost affordability.
Isn't that amazing?
Builders in Henderson and Las Vegas are also offering incentives, including temporary interest rate buydown and closing cost credits, which helps buyers stretch their budgets. Pairing these with smaller down payment programs like FHA 3.5% minimum or even USDA loans for eligible rural areas near Las Vegas can make ownership surprisingly within reach.
Nice.
Debt to income ratio and affordability. Another major factor is your debt to income ratio, or DTI. Lenders want to see that your monthly debt payment, including the new mortgage, are manageable compared to your income.
That's true.
Most conventional loans prefer a DTI of 43% or less, but FHA loan may allow higher ratios if you have other strengths, like steady income or good savings.
Nice.
This flexibility is key in markets like Las Vegas, where median home prices hover around $450,000 in 2025, according to the Las Vegas Realtors. Buyers can also improve their DTI by paying down smaller debts, like credit cards or auto loans, before applying. And remember, lenders may count extra income streams as long as they can be documented.
Really?
New loan options in 2025. The mortgage market is evolving.
That's right.
In 2025, lenders are offering programs designed for today's reality.
Really?
For example, bank statement loans allow self-employed buyers in Nevada, such as gig workers or small business owners, to qualify using bank deposits instead of tax returns.
Nice.
Share equity programs are gaining traction, where companies or nonprofits contribute part of the down payment in exchange for a share of future appreciation.
All right.
And alternative credit data loans consider rent, utility, and even subscription payments, making home ownership possible for those who were previously overlooked.
Nice.
Locally, some credit unions in Las Vegas and Henderson are piloting flexible lending programs to compete with national lenders, giving buyers more choices than ever.
Isn't that amazing?
Final thoughts. So, what's the takeaway? Qualifying for a home loan in 2025 isn't as out of reach as it may seem.
That's right.
Credit requirements are flexible, down payment assistance is widely available, and new loans products are expanding the definition of who qualifies.
Nice.
Here in Southern Nevada, from Henderson's master plan communities to the vibrant neighborhoods of Las Vegas, lenders and builders alike are finding ways to open more doors for first-time buyers. The key is understanding your options and working with professionals who will guide you through the process.
That's right.
If you've been sitting on the sidelines thinking you can't qualify, now may be the time to take a closer look.
Really?
I'm Phan. And if you'd like to explore loan options that fits your situation, let's connect. Your path to homeownership may be closer than you think. Thanks for tuning in. Discover more about Las Vegas and Henderson with our free relocation guide. For additional details or a free consultation, visit my website or social media. Find all the links in this podcast description. Also, I love hearing from our listeners. If you have any questions, comments, topic suggestions, or real estate stories to share, please reach out to us. You can follow me on my social media pages. Just search for Long's Real Estate, local realtor in Las Vegas and Henderson, Nevada. I will also save the links in the description of this video. Until then, remember, in Las Vegas and Henderson, The odds are always in your favor when you have the right real estate agent by your side. Thanks for joining us today. See you next week.